Are you considering adding silver to your portfolio this 2026? Smart move. Silver has been a timeless store of wealth and is a powerful industrial metal, but the market is always evolving. In this video, I'll reveal 5 crucial things you absolutely need to know before putting your money into silver in 2026. First is industrial demand. According to the Silver Institute, in its newsletter last November, 2025 will be the 5th straight year that the demand for silver will be much greater than the available supply of silver. Simple economics will tell us that the scarcity of a product has a tendency to bring up its price. Unlike gold, silver isn't just a monetary metal, it's an industrial powerhouse. Think about it. Every smartphone, every solar panel, every electric vehicle, they all require silver. This dual nature means silver benefits a lot from economic growth, as industries demand more of it, but also from uncertainty, as investors seek its safe haven properties. Recent supply chain disruptions, for instance, have highlighted how critical silver is to modern manufacturing, impacting its price movements. But here's the kicker. This dual role can also mean silver is more volatile than gold. Which leads me to my next point, price volatility. This supply chain imbalance mentioned in my first point, combined with strong investment flows seeking inflation hedges amid global monetary easing and fiscal dominance concerns, creates the perfect storm for sharp price swings. Unlike gold, silver reacts positively to both economic fear as a hedge and to economic growth as an industrial component. You win both ways. Crucially, this volatility is closely tied to the gold-silver ratio, or GSR. Historically, silver tends to significantly outperform gold. Thus, the GSR compresses or falls during strong precious metals bull markets. As the ratio drops from elevated levels, which indicates silver is cheap relative to gold, towards its long-term historical average, it signals a massive catch-up move for silver. Analysts expect a compression of the gold-silver ratio in 2026, implying that silver's price movements will be dramatically amplified compared to gold. Reinforcing silver's extreme, yet potentially profitable, volatility. Silver is outshining gold this 2025, with its price surging and outpacing gold's rally. Experts are predicting that this surge in silver's price will continue in 2026. Bank of America predicts a potential peak of $65 per ounce. Robert Kiyosaki is predicting anywhere from $75 to as much as $100 per ounce by the end of 2026. BNP Paribas and Salomon Global both have outlined scenarios wherein silver could reach $100 per ounce by the end of 2026. Speaking of volatility, the price of silver at the start of trading hours on December 1, 2025 is at $57.59 per ounce. The price of silver at the end of trading hours on Friday, December 12, 2025 stands at $64.47 per ounce. So, you're convinced about silver, but what's the best way to buy it? The choice matters more than you think, especially with recent debates about physical versus digital assets. I'll break down the pros and cons next. As we enter 2026, silver has re-emerged as a focal point for diversified portfolios, driven by a historic bull market and structural supply constraints. Physical silver remains the purest form of exposure, capturing the ongoing supply deficit and industrial demand surge. With inventories tightening after 5 consecutive years of deficits and falling visible stocks, physical bullion premiums and hoarding behavior have intensified, underscoring tightness in the tangible market. This dynamic is amplified by silver's designation as a critical mineral in the United States, which may constrain free-floating supply and support long-dated physical demand. For investors seeking liquidity and efficiency, silver exchange-traded funds, or ETFs, continue to be central. These vehicles provide tradable access to silver spot prices without storage logistics, and have seen significant market inflows amidst rallying prices, though some volatility persists with recent drawdowns in some ETF complexes. Finally, silver mining stocks provide leveraged exposure to underlying metal prices. Equities such as First Majestic, Hecla, and larger diversified producers benefit disproportionately from higher silver prices and operational leverage. Recent sector leadership from mining stocks, evident in shares like Newmont entering buy zones amidst metals rallies, highlights the appeal of equities in capturing upside beyond spot metal returns. Number 4 is inflation hedge. Silver's valuation for 2026 is uniquely positioned, acting as both as an inflation hedge against policy risk and also as a dynamic economic indicator of global growth. Recent events, such as the Federal Reserve's pivot towards rate cuts, despite persistently high inflation, which is projected to remain above 3% in the US, these fuel the hedge argument. Its recent breakout to all-time highs of between $58 and $62 an ounce, following nearly a decade of range-bound trading, signals that the market is finally acknowledging the metal's role as a physical inflation buffer, mirroring investor concerns about global debt load and currency stability. At number 5, we have future demand drivers. The year 2026 for silver looks bright, driven mostly by two major trends: green technology and emerging markets. The global push for renewable energy, think solar panels, is a major demand driver. Electric vehicles, 5G technology, advanced medical devices, they all rely on silver's unique properties. It's only a matter of time as developing nations begin to industrialize and the middle class begin to grow, the demand for electronics and consumer goods, all containing silver, will only increase. Keep an eye on this technology, perovskite silicon tandem cells. This recently developed technology is being seen to significantly increase the energy conversion efficiency of solar panels. And to do this, these cells require enhanced conducive pathways to better manage the higher current densities they produce. And guess what they need to do this? Silver. Furthermore, central banks around the world are diversifying their reserves. And while gold gets the headlines, silver is increasingly being considered. These long-term trends provide a strong fundamental backdrop for silver, regardless of short-term market fluctuation. So there you have it, 5 important things you need to know before you invest in silver in 2026. It's a fascinating metal with a rich history and an even more promising future. My own mindset when it comes to investing is, can I live with the worst case scenario with this decision? With silver in 2026, I think the worst case scenario is the spending power of my money will essentially be the same, which is still a much better scenario than your money's spending power being impacted by 3% inflation year on year. Yikes! If you found this video helpful, hit that like button. Also subscribe to this channel for more investment insights. And let me know in the comments below, are you bearish or bullish for silver in 2026? What are your biggest concerns and hopes for this precious metal? Thank you for watching, and I'll see you in the next one.